Just to remind everybody, the hashtag for this afternoon's event is YR FinTech. There's been some nice social media activity already, so thank you for that. We appreciate your support. So once again, it's hashtag YR FinTech. I'd also like to remind you, if you haven't heard already, that your badge will gain you free access to the TAVES Consumer Electronics Show today. So that's taking place here in the same hotel. There are many, many dozens of exhibitors showcasing the very latest in consumer electronics, everything from domestic robots to 3D printers to virtual reality and augmented reality, even electric cars. You can have access to all of that today for free with your badge. So I encourage you to take advantage of it. Walk around when we're done here, just after 4:30 or so. So you'll no doubt enjoy yourself. This is the 6th annual TAVES Consumer Electronics Show. Good stuff. All right. All right, so to be respectful of our moderator and our upcoming panelists, their time, I'm going to just start off. We're going to start off by inviting them on stage. One quick note, by the way, we are going to be using Facebook Live to broadcast this next session live over Facebook. So I was asked to remind everybody, including the panelists, to keep the language professional. I know you rowdy FinTech people. So to watch the language, please, as we're going to be broadcasting live. So drop your F-bombs now off stage, please. Dinero, I'm looking at you. All right, without further ado, I'd like to introduce the next panel, The Future of FinTech, with Dinero Lee of Mars. He'll be leading the panel discussion. Dinero brings a comprehensive background in digital payments, marketing, and business development to Mars. He's passionate about technology, connecting consumers and businesses to innovations and platforms within the Mars FinTech cluster. Dinero joined Mars from MasterCard Canada, where he was Director of Business Development and Partnerships in Digital Payments. Over to you, Dinero. Please help me welcome him.
Thank you, Mark, for that wonderful intro. It is my pleasure to be here today. I know everybody's been here already for a couple of hours, so we'll try to make this panel as interesting and engaging as possible, and I'll try to keep my voice at various levels so that you are paying attention. And without further ado, I just want to welcome up the panel one by one. So first off, Bianca from BioConnect. She is the VP of Strategic and Partnerships at BioConnect, so welcome. And our second speaker is Deepak Chopra, who's the President and CEO of ClearBridge Mobile. Welcome, Deepak. And Eva Wong for the Borrowell. She is the Chief Operating Officer. We're happy to have Eva with us, very well known to us in the community. And last but not least, Alexander Pei, who is the Head of Market Development at PayPal Canada. So I think, round of applause for our panelists. Bianca flew from Vegas, from Money 2020 today to be here with us. So we are very pleased and happy to have her with us, to share with us some of her insights as well in the FinTech space and some of the great progress that she's been able to get with BioConnect. So I guess the first thing I'll do is just start off by maybe asking Eva, who is the Chief Operating Officer for Borrowell, one of the leading Canadian alternative lenders in the consumer space, to give her sort of 5-minute bio on herself as well as what Borrowell is all about. Eva.
Thank you. Technology. It helps to turn on the mic, right? Yeah, so my name is Eva. I'm one of the co-founders of Borrowell, and Borrowell was founded around 2 years ago to address the problem of credit card debt in Canada. You guys may know the stats, and you probably hear on the news all the time that consumer debt is at an all-time high, and a big proportion of that is credit card debt. And so we saw that as a problem and sort of felt that, more broadly speaking, consumer credit in Canada really is broken. I think there's something not quite right when $85 billion of credit card debt are being carried, most at 20% interest, and that's quite high for people, especially if you've got good credit. And so we started out about 18 months ago with a personal loan offering. And I guess the way we think about it is that the reason consumer credit is broken is that you either have to choose between convenience or affordability. The credit card's obviously very convenient, but not that affordable. And if you want to go into the bank to get a loan, you would get a better interest rate there, but the process would take a couple weeks, a couple of visits in branch, filling in a whole bunch of forms with a stranger. Not most people's idea of fun. And so through Borrowell, you can come to our website and get a quote immediately in a minute. You fill in a form, and then it's a bit of a story. We actually added time to added a little spinner and some processing time because people didn't believe when you click the button and you got the loan quote that it was actually a real quote. So I'd say right now we have sort of we think of ourselves as having sort of three prongs to our business. The first is the personal loans. In June this year, we were the first company in Canada to offer Canadians their credit scores for free from Equifax. So we partnered with one of the leading credit bureaus in Canada so that all of you can now, on your phones, go to borrowell.com and get your credit score for free. And that's been great for sort of building trust and awareness, which is, for those of you who are in FinTech, we know is a big deal. And then just yesterday, we announced a partnership with CIBC. So that's super, super exciting. I think it's the first time, someone was writing, it's possibly the first time in the world that a major bank has actually used a marketplace lender in order to power a loan product for their own customers. So definitely a first for a Canadian bank, and I think puts CIBC ahead of the others in terms of a personal loan offering that's completely online. So happy to talk about any of that.
Thank you.
Hello, everyone. My name is Deepak Chopra. I'm the CEO and co-founder of ClearBridge Mobile. We help enterprises mobilize. We're a team of mobile professionals helping large enterprises across North America implement digital solutions, primarily mobile and wearable apps. A lot of enterprises struggle with this, where they're looking to, extend their reach to their consumers through mobile apps or connected apps of any type of sort. We help them make that possible. We work with companies in a number of different verticals in the fintech space, in media, retail, QSR, a number of different verticals. We've had the opportunity and fortunate, opportunity to work with a number of high-profile brands. So, we're based here in Vaughan, and we're a team of about 50 people, and that's our focus, is creating those custom bespoke solutions to make mobile happen.
Hi everyone, my name is Bianca Lopez, and I'm one of the owners and VP of Strategy and Marketing for BioConnect. So BioConnect is a Canadian-based company. We are about 50 people in Liberty Village, so not too far from here, which is very exciting. We've been around for about 7 years and haven't really been able to tell the world what we do because we have built an identity biometrics platform. And it's mostly used today to secure the large data centers all over the globe. So not the kind of thing I can go tell the media, hey, I secure data centers. It's usually a recipe for getting hacked and fired at the same time. But now what's really exciting is you're starting to see a world of authentication and biometrics explode as a second wave inside the financial services sector, which brings me personally to fintech and finance. So now you're starting to see banks understand that RSA tokens and passwords are kind of a thing of the past, and passwords are very static. We've been talking about it for years if you've been in the space. So now you have ubiquitous devices like iPhone and Android that enable you and I and the consumers to get quite familiar with what used to be creepy, which is biometrics. So what we do today is we build a platform that's completely agnostic to modality type. So that means it can take and read your eyes, your face, your finger, the way you walk, your ECG, and be used for authentication, completely agnostic of what device you're doing that in. So quite applicable when we start working with some large US and Canadian banks and now payment processors. So that's kind of what we do.
Hi everyone, how are you? You good? That's good, because it seems pretty quiet in here. My name's Alexander Pay. Contrary and sadly for my own thought, I don't own nor did I found PayPal. I also, unfortunately, am the second Australian you're going to hear from today. I'm the second Alex from Australia you're going to hear from today. And I'm the second Alex from Melbourne that you're going to hear from today. Hi, Alex. How are you? Who doesn't know what PayPal is? Because I've learned that's actually an easier way to address it. Who doesn't know what we do? All right. Well done, marketing. Now to quickly get away the PR kind of sound bites, we're one of the largest online payment processors, 193 million customers operating in almost 200 countries around the world. Here in Canada, 6.4 delightful million Canadians use our service, and over 250,000 businesses use our service. That's it from me.
Wonderful. It's amazing to see such a diverse panel here in front of the group. And it's been very exciting for Mars to see so much activity and so many innovative companies come into this space to solve real problems within the Canadian financial services sector. So, I want to kick this off very quickly just by jumping into the first question for the panelists here, which is around design-centric thinking. And my first question is going to go to Deepak first. I'll let him sort of take the first baton here in answering this. And the question is, when you think about design, how do you differentiate yourself from the industry as you think about the customer journey?
It's a great question. So we create mobile experiences. So we have a team of UI, UX folks that are working with clients and across a number of industries. What we really starting to see is the intersection of trends. We've had the opportunity to work with North American-based, large U.S. media companies. We've had the opportunity to work even with PayPal down in the United States, and we've had the opportunity to work with people like Tim Hortons here in Canada. But what we're starting to see is there's some commonalities that are starting to happen, or you're starting to see ideas transition from one industry to the next, because everyone's trying to leverage, what is the best user experience? How do you simplify the process? And, whatever that mobile application is, that they're, what customer problem they're trying to solve through that mobile journey, we're starting to see a lot of intersection in terms of design trends. Are there things that are done in children apps or in games that can be leveraged in a fintech type scenario to simplify that loan application process, to simplify paying with a loyalty card or a payment card? So we're seeing a lot of intersection of that. And the overall concept is the same: simplification, make it easy to use. But to get to that, there's a lot of complexities. It's very difficult to take a loan form that could be dozens and dozens of fields and make it really, really simple on a mobile phone. Or a phablet in some cases now, as we're starting to call it. But the trend is overall the same. How do you simplify it? And we're seeing that's where a lot of the emphasis is on design there. And the most challenging thing for our customers to understand is typically the more simpler it is, the harder it is to build. There's a lot more complexity, a lot more load on your back-end systems that have to be taken care of, because you're eliminating a number of different aspects. But you need to do that work somewhere. But those are the trends we're seeing as customers are really starting to be forward thinking, and they're starting to ask those questions. What are people in this space doing? What are people in that space doing? And we have the fortunate opportunity to work with companies in a lot of different spaces, so we can leverage that know-how and move it back and forth.
Wonderful. And it's a good point that Deepak made, which is around, if you want to make it more simple, be prepared to do a bit more work to make that experience a reality. So, you made a pretty good segue to, the online lending space as an example, which Eva's perfect person to take the baton now to really kind of answer, when you think about design in your space and how you simplify the online application form for loans, what have you seen to be effective in that space? And can you tell us a little bit more about how Borrowell has approached that?
Yeah, I did want to clarify. We only, I think, have a dozen fields on our form, so it's not dozens and dozens. So we have done some work in simplifying. I think in this area, we still have room to grow for sure. I would say that where we've gone from a design perspective is from sort of taking the lens of the consumer, like what is simplest for them, and is there information that we can get from them at a later time? Is there sort of a way just to sort of simplify things from the very beginning? But yeah, I think that's one of the ways that fintechs can differentiate themselves from banks. Typically, banks I feel like are maybe more compliance focused or compliance or holds, and not that we weren't compliant at all. We were very compliant with all rules and regulations, but I think we're able to sort of take that consumer lens first and really drive that forward.
Wonderful. Alex, I know you should be able to give some thoughts and some to your experiences as it regards to consumer experience and the customer experience. And I am a big user of PayPal myself, so maybe you can talk a little bit what you've been doing lately in the customer journey experience and how maybe what you're doing differently in PayPal now that you're sort of taking the reins.
It's, when you're doing things at tremendous scale, there's a very, very big difference from what you as an organization think is the most simple or desirable customer journey and what your customers actually want to do. We're a teenager in the kind of financial services and payment processing game. We were founded coming up, I think, on 18 years ago. But we've gotten to a scale and a size with legacy infrastructure, et cetera, like I said, serving a couple of 100 million users, that for us to make a 1 degree change is really tough. And this is where, the fintech startups, et cetera, the ability to be agile, truly agile, is something that any of these organizations at scale don't have the ability to do. So one of the things we were doing at PayPal, PayPal was founded on three very simple pillars: safer, faster, easier. Over the years, we've built bells and whistles that make things, sexier, cooler, more appealing. But at the end of the day, and certainly over the last couple of years, our product teams, our design teams have really come back to those three fundamentals. We think they resonate with our base. We think they resonate with the base that we'd like to acquire. How do you make things safer? How do you make things faster? How do you make things easier? And for us, the biggest change we did was to stop kind of putting words in our customers' mouths on what they wanted to do, and actually went out and asked average people, average business users, what their pain points were. I think large organizations are very, very good at creating procedures or fixing problems that don't actually exist to our everyday users. Who's ever experienced that? I've experienced that at PayPal numerous times. Congratulations, we spent 18 months deploying this update to a problem that nobody cares about. But you know what the actual problem is? I can't reset my password with PayPal. I've forgotten it. How do I do that? That's a serious pain point. And I think large organizations sometimes are a little bit wary of kind of trying to, spend time, energy, and resources on fixing things that aren't super cool, that aren't going to get the media talking about it. No one wants to write about PayPal fixes password recovery. No one picks that up. But they did want to write about the fact that we had to return a very precious bowl to the lovely people of the state of North Carolina because we decided we weren't going to build a facility down there after they passed some kind of legislation. So, these types of things, there's a balance, and it's something I was just really interested to hear the previous panel talk about. There is a balance that needs to be met, whether it's between your customers and your shareholders, whether it's your own kind of like desire for innovation and what's realistically possible with regulation. But I think it's really going and being customer centric.
Yeah, and that seems to be a very common theme when you think about, of course, how do you service your customers and understanding their pain points as opposed to what your organization thinks is the pain point. So I want to kind of touch a little bit on what Bianca is focusing on, because her company, her startup, really focuses on the B2B side of things. And so when you think about the customer journey in that perspective, she has to really understand, number one, who her customers are in the B2B space and how they address problems as opposed to the consumer side of things. So Bianca, maybe you can share some insights as to, how does BioConnect understand your customers and their customers' pain points, and how do you sell to them?
I'll try to take the question in two parts. So the first one is, how do I understand my customers' needs? In the end of the day, so I'll just stay within banking for a second, just for the sake of argument. Even banking in itself, if you're a technology company or a fintech company, it's its own maze, right? Like you look at business financial services, you look at Canadian retail banking, you look at wealth management, capital markets, they all operate very differently, and their set of regulations or needs and desires are all very different. So I think when you're looking at starting to go target this big, massive bank, you first need to understand who you're going after and who is their stakeholders. So as an example from an RSA token replacement, is everyone familiar with what an RSA token is? Yes? Okay, those little things that look like a key, that there's a number that turns, and it's used for second factor authentication. So today is used widely all over business financial services for approving a wire or a transfer. So when I looked at saying, can biometrics be a replacement for this, I really had to understand how do they deploy these things right now. The problem that I think a lot of technology companies face or fintech companies face is you go and say, here's my new cool shiny toy, and you forget to really truly understand the process that that bank is currently wired, whether that is an infrastructure or a compliance need. And there's a reason why they behave the way that they behave. There's a reliability that is necessary, that when you're sort of functioning in the millions of transactions, and there's a reputation that you need to take place. So I think that a huge portion of my due diligence each and every day when I go in to talk to an SVP or someone who runs the head of capital markets as an example is understand their pain points, and how does my technology really either change process, make them money, make them more compliant? What is it that you're doing that it's no dissimilar than, are you gonna go buy water because you're thirsty? Like it's as simple as that, but people sometimes tend to forget when it's a technology. And I even have a bigger problem when I look at biometrics, because a lot of the times I'm being an evangelist and saying, this is not sci-fi, this is something that you should think about, this is the why, here's the stats on, as an example, phishing fraud is one of the largest costs for the bank, and it's mostly driven by passwords and RSA tokens. So, but they've been doing it for 30 years. It's a multi-billion-dollar company, and I'm a growing technology company in Canada. So I think that's the first portion. You asked me the second question in terms of how do I think about that design of the technology or the packaging of the technology, is still what is the value add that your technology brings? If it's not compliance, if it's not making someone money, have you thought about how that customer of that bank is going to utilize it? So I often put myself in the situation of going, if I'm going to partner with a Canadian bank as an example, which we have, or a large merchant processor, which we just announced, which is really exciting, a bit of bragging with Visa, but how is Bianca as a Visa user going to utilize the technology, and how do I portray that value proposition that's going to make Visa fundamentally more capable to compete than MasterCard, because that's going to create a sense of urgency when they buy my tech. So I think that fintechs really have to understand that, and it sounds really basic, but I think that that's what we miss on explaining, and I still see senior executives at the bank going, can you help me define the business case? So I think it's our job as the fintech innovators to really understand the business case and know what regulations, like AML is changing next year. All right, here's why this is important, and here's why you need to pay attention.
Yeah, a very important point is to really understand and bring some thought leadership into the recommendation as to why you should be working with fintech companies in the first place. So a very good point. And it's only fitting that this panel is called The Future of FinTech, and we have 4 perfect examples of people experts in lending, in mobile, in biometrics, and in payments. So I want to ask the question, given your vast experience, what is the next big thing in biometrics? I'll start with you, maybe Bianca, just to kind of give us your high-level perspective on where that's going based on the platform that you developed and what you hope to achieve.
Okay. Again, slightly perhaps biased, but take it with a grain of salt. One of the things, I'll use an outside source, sort of just be thinking about it. When you think about connected devices today in the world, and you think about the fact that Gartner is predicting on the billions of connected devices, how are you going to authenticate and provide your end user a seamless experience that provides that faster, easier, but it doesn't compromise security? Passwords is not the answer. So you look at the stats over the years, how a static password, we are all guilty of it. Like some people either use the same passwords for everything, or they try to make it really complicated, so they'll end up with a sticky note on their computer. So when I look at what's next for fintech, I think that one of the leading indicators that gives me a degree of confidence that I'm not just drinking my own Kool-Aid is when you look at Money 2020 in Copenhagen earlier this year, you had 3 tracks on authentication. When you look at Money 2020 in Vegas, which just ended, which is the largest finance show in the world, you see 2 full days dedicated of authentication and biometrics being a topic spoken by lead people much smarter than me that lead Wells Fargo and large banks and Barclays and BBVA saying we're using it, we're deploying it. So I bet on the future of authentication not being a static thing. Do I think biometrics is the only answer? No, but I think that is one of the main leading answers when you look at the world of continuous authentication or connectivity, or when you just look at your own Salesforce and you look at how mobile are they? Can time and attendance have a role to play with biometrics to be able to tell me that Jess was really at work that day, she just happened to work remotely? So that's what I believe in the future of at least one of the big things to look forward to.
Wonderful. Alex, what do you think? What's the next big thing in payments or in mobile?
I was thinking about, biometrics is super cool. Just on a side note, a few years ago, when I was working in payments, the concept of someone not having, 2-factor authentication was just like the coolest thing. Like, it can't get any more secure than that. I'm going to log in and then someone's going to give me, a text message. Like, it can't get any cooler. So, to go into something that BioConnect are doing still I just find absolutely amazing. I don't want to use buzzwords, but I am, all right? When I think about payments, and I'd love your feedback, it's probably not going to happen in this forum, but when I think about payments, I think of the kind of feeling of ubiquity, the sense of kind of invisible or agnostic kind of funding sources. And so when I say that, how many of you actually have an allegiance to Visa versus MasterCard? Okay. How many of you have kind of been led to a choice because you bank with TD or you bank with CIBC and they issue Visa cards or they issue MasterCards? Yep. So when we look about it, right, they're providing as a platform. They're providing as a service, in that, without going into what actually a Visa or MasterCard does, which is not provide credit. But when you talk about this type of thing, you're being kind of led down a path where you want a service and someone's giving that service. So when I talk about this sense of kind of the feeling of ubiquity, cash is ubiquitous. Let's just be clear. As a digital payments company that evangelizes digital payments, cash is still ubiquitous. That's definitely going to change, and we're seeing it rapidly change. It's interesting, we're talking about mobile payments. When I joined PayPal, we were super excited that we'd hit $4 billion in mobile payments. And again, this is high fives, we're ordering pizza, who's buying beer? This is absolutely amazing. This year, we're going to on track to hit $100 billion in the last 5 years. So we're growing exponentially. It's not us as PayPal. That's not actually us leading the charge. That's you as consumers who are deciding that you want to do that. That is the democratization of hardware and technology. This is mobile phones, smartphones are becoming cheaper and they're everywhere. Data, hopefully, is becoming cheaper. Companies are allowing you to purchase their things on mobile website, mobile apps, online, all these types of things. A lot of this kind of growth in payments is being driven by consumers. So when I think about the future of payments, I think that consumers are, to a certain degree, indifferent towards whether it's a Visa or a MasterCard or anything like that. They just want the transaction to happen. Whether it truly is ubiquitous, you want the feeling that you can purchase anywhere you want, any time. Nothing truly is kind of ubiquitous. And when I talk about being agnostic, it shouldn't be whether or not you've paid quite a lot of money for, to me, is basically a glorified Fitbit. It shouldn't matter whether you've got an iPhone or an Android or anything like that. So when we talk about being agnostic, it's really going to be the consumers, and again, whether they be businesses or whether they be true kind of everyday consumers, really driving the growth in payments.
Wonderful. Eva, what do you think the next big thing is in lending, specifically in Canada?
Yeah, I think there's definitely a lot that I could talk about in terms of sort of process, but I think one of the other interesting trends in lending is just underwriting as well. So today, I would say in Canada, the best and most reliable data that we have in terms of how to price a loan, how to decide whether someone's going to get a loan or not, is credit bureau data. And I don't know if you've seen, John Oliver did a great segment on credit bureaus, and it's complicated, right? So there's a lot of errors in the data that is collected, and it's good information, but I think there's a lot that's becoming available. And so for us, even with offering a free credit score, we're now able to get not just data one time, but a history of data and a trajectory of data. We're able to gather more information in terms of like interests and other things, and really build an ongoing relationship with the consumer that we think is going to be helpful in assessing their character, one of the 4 C's of credit. So I think that is going to be really exciting in the future, and especially as we see other trends, like with Uber, TaskRabbit, these other sort of ways of sort of the participation economy. People don't necessarily have regular jobs with pay stubs, and that's a big part of how we underwrite. A lot of younger people are foregoing car ownership and even home ownership, so the collateral that people have typically used for credit is also changing. So I think there are a lot of changes in the world that are happening that are going to impact how we look at credit and how we extend credit.
Wonderful. Any similar remarks, Deepak, that you've seen in the mobile space?
Yeah, if I start from the top down, so what's happened is, smartphones have proliferated, all the stats and so on. So now you have the ability to do digital banking in your hand versus going to the branch. So that's the big trend. So, then from there, what's happening is across industries, including FinTech, is, so we talk to a lot of executives, a lot of different enterprises. They all recognize what's going on here. They're not, for the most part, they're generally pretty smart people. They're not fools, so they see what's going on. So the challenge they're having is their organizations are old and legacy structure, the vast majority of them. So what do? They can try to go out on a path to start innovating, to create these products. But, if you were to, take a company in any given sector and, wipe it clean and start with a fresh piece of paper, it'll look completely different. But you got thousands of employees, you got cash flow, dividend payments, et cetera, depending on the type of business. So the challenge for them is they got a model that works and makes money, but they see trends that are starting to evolve and change, but you don't have an organization that is adaptable. And the reality is people in Liberty Village don't want to work at an old state company. That ain't gonna happen. So how do you innovate and how do you change? So the executives of these companies are starting to recognize that. Some of them will go build labs and et cetera. I suspect a lot of them will go blow a lot of money trying to do that, in the concept of innovation. But what will end up happening is that they're going to end up partnering with different companies out there, like yourself and BioConnect and so on, because they don't have the capability internally, whether it's to go hire new work staff, to innovate within their 4 walls. Cisco was a long time known for, basically their engineers would leave, go create a startup, and then they would go buy the startups for billions of dollars. Because they effectively knew those engineers couldn't create those innovative products within their 4 walls. They had to push them out and bring them back in. Obviously made them millionaires and billionaires in the process, but that was the model that they followed. So I think a lot of companies in FinTech and other traditional industries are starting to realize that they have to go outside, whether it's partnering up with other companies because they don't have the innovation in-house. They recognize their issues. They're starting to recognize, this is what we need to do, but we can't. They sort of understand what they need to do in most cases, at least the ones that are sort of connected and well aware, but they have the challenges they need to partner. And that's where companies like us come into play as well, is where, for the organizations that want to make that journey of trying to do it partly in-house, out-house, we help them during that process. So then you drill down is what are they doing in terms of the specifics, so they're starting to say, we want to build a mobile app to engage our consumers in a different way. Do we set it up as a separate division within our company that's independent, has a different P&L? Does our org structure manage that? They might partner up with other companies. They might buy them out, right? Eventually come in and say, okay, we're just going to take you. And the reason is because they couldn't, is it necessarily something proprietary or not? Maybe not, but the reality is because it's just quicker to do it. I'd rather just, this is sort of the Cisco Silicon Valley model that they're starting to, beginning to move forward out there. And those are some of the trends we're starting to see. And in terms of mobile apps, they're just trying to figure out how do if I were to redraw this company on a piece of paper, how would I attack my consumer? How would I improve my business processes? So those are the type of things they're starting to say that we need to innovate on mobile to do. In terms of the fintech space directly, we're working with clients across, I would consider them sort of two large areas. People that have pools of money or want to create pools of money, and people who want to transmit the money. So retailers, for example, like Starbucks, if you think about it, what they've done is effectively, they've created a pool of money. Like I have $50 to $100 with them all the time. They effectively become a pseudo bank, or they're carrying, and they're starting to make it a business now as well for them. So those folks are, some of the Canadian retailers and North American retailers we've talked to are starting to say, how do we embark on this model where we can make our model more profitable? How do we cut the banks out? How do we cut the credit card fees out? You're seeing Walmart and Visa fight, I think, in some of the stores up in here. It's a store in Ontario, but it's more of an epic battle of how do I keep that 2%? Because 2% is very, very important. So Walmart's saying, I don't need you guys, because mobile now allows me to, one, is capture a pool of money and transmit the pool of money. How can I cut your rail right out? And that's what's starting to happen out there at a big fundamental purposes, is that everyone's fighting for a margin. Fundamentally, that's what's starting to happen out there, and the banks keep a lot of margin. The banks actually play in two sides, right? They play on the pool of money and the transmission of money. Your deposits and when you do transactions. So they're double dipping across both sides. PayPal is, I guess, mostly, in some ways playing on both sides as well. The movement, and also has money sitting on, I guess they were ranked, if you consider it as a bank, it's the 20th largest bank in North America, right? But they're not regulated. They're not regulated, right? So it's because it's just a pool of money, and they're not offering interest and so on. So I think there's going to be a lot of different changes, and everyone's looking at how do I capture those economics, because the banks make, someone said $100 million a day, whatever it is, and how do I capture that money? And retailers are looking at it, other people are looking at it. Us, we're arms dealer. We're going to help everyone in that process. So that's what we do. So that's fine.
Wonderful. So I think the laughing is a good point for us to cut Deepak off here a little bit. I've been given the 2-minute warning. So before we wrap up here, I know we had a lot more topics to cover, and it's unfortunate we have to kind of go into Q&A shortly. But I want to make a point that, a lot of the activity that's been happening in this space has been really encouraging. And we were going to talk a little bit about the Payment Service Directive that's been happening in Europe now, which is called the PSD2. And unfortunately, we don't have the time to talk about it, unfortunately. But, it really does open up a whole new era of innovation, potentially, and some really interesting dynamics between big banks in Europe as well as the fintech startups. So, if you are familiar with the Payment Service Directive, Part 2, please look it up or talk to any one of us. It's a very, very interesting, I think, and it's going to impact the way we look at financial services and how fintechs interact with the big banks going forward. So thank you very much. And without further ado, welcome back, Mark.
Thank you, Dinero. That was great. We do want to reserve some time for questions. Please stay on the stage in case we have one for Dinero. But and also, if you didn't get to one of those or more of those topics, I hope you can stay for our cocktail reception in a few minutes from now, and perhaps chat with the guests one-on-one. We have time, maybe one or two questions very quickly before our fireside chat. All right, any questions for the panel? We have a couple of microphones circulating. Yep, she's right there. Thank you.
I don't need it. Actually, PayPal, I don't consider them startup anymore. They're one of the banks, like you said. They have more money than half of the banks in the world. So,
in spirit.
Yeah. So actually, yeah, exactly. So there are just two ladies that I'll ask a quick question. You just mentioned you have collaboration with the bank. It's actually very interesting that the fintech that's actually startup and come to kind of disturb the big guys, collaborate with them. Can you elaborate on this a little bit?
Yeah, so I think what we really care about is creating more choice and creating better options for consumers. And I think for us, the partnership with CIBC really is an accelerant, and it helps us take the process that we've worked really hard to simplify, to make very easy and customer friendly, and have more Canadians have access to that. So for us, that's what it was about. We've never been anti-bank. I think we've always been anti-credit card debt. We launched with a Schedule I bank as one of our loan capital providers and one of our funders. And so I think there's definitely room to work with the banks. And I mean, I think it's the same in any industry. In some places you compete, some places you cooperate. And so, yeah.
Right. All right, we have time for one more. This gentleman here. Thank you so much.
Thank you very much. First of all, I want to say thank you for a great session. What I wanted to actually say is great believer in moving towards biometric authentication, like what BioConnect, Day On, others are bringing to the field, simply awesome. And what I did want to ask, though, is that there is this thing about social norms, because then you kind of come into the creepy factor. How fast do you think social norms are going to evolve that will actually enable folks such as Borrowell, folks such as Lenful, et cetera, to be able to start incorporating these type of frictionless methods into the onboarding process?
Great to hear we have a fan in the audience. Always nice. I think that the social norms are already starting to change. So when I look at biometrics as an industry, it really originated after 9/11. You saw a lot of things going into the government, sort of law enforcement space. Apple did us a tremendous favor about, I think, going on to 5 years now, launching Touch ID. Now you have over 9% of the world's population just on the Touch ID alone. So it's starting to become behavior. And when you talk about the future of payments and that ubiquitous device, you're starting to see people talk, like we're doing a connected car project as an example. And things that you don't realize you're doing. So as you walk to get your Starbucks in the morning, I can take that biometric, and it's very non-invasive sort of form of biometric. So I think when I look at the way the social norms are changing and the population is changing, you're now having devices that people are using each and every day. So biometrics has become a lot more mainstream. So I think that the adoption of it from a Borrowell or a FinTech is even faster, because there is that perception of the cool and new and young and hip. So I don't think that there is as much sort of concern of going, oh, I'm going to put my fingerprint here, as perhaps there was when it was just at Nexus, when it was something that was very law enforcement driven. So I think we're starting to see a large majority of it. And when you look at the Globe and Mail published a report not too long ago saying that 770 million applications by 2019 will be using biometrics. So when you think of that explosion in the app stores of the world, of just putting that as the de facto standard, that to me, and when I see a bank putting biometrics on a large billboard, to me, I've hit mainstream. I now have a bank saying, this is what we should be using, and you and I using Touch ID each and every day, so.
Can I, sorry, very, very kind of just out of sheer curiosity here. Why do you think, as individuals, why do you think it was fantastic to have EY give some data up there before. Why do you think, whether you do or you don't, why do you think you'd leverage or use FinTech? And I'm going to give you a couple of options, and I'd love kind of like a raise of hands. You're going to use a FinTech company, an innovator, a startup, whatever you want to call them, because it makes something safer. You're going to use them because it's cheaper for you or your business. You're going to use them because it's easier or more accessible, or you're using them because no one else is offering you that product or service, or no one else is willing to offer you that product or service. So who would use it because it makes something safer? Raise your hands. Who would use it because it makes something like cheaper for you? Who would use it because it would make things faster and easier? You can get a bank loan from your phone, okay? And who'd do it because no one else is offering that product or service? All right, thank you just so much. Sorry, I was just interested.
This is his customer research.
That's it.
This is PayPal.
Awesome. Well, thank you very much to Dinero Lee and the amazing panelists, our experts, for joining us. Please give them a round of applause. Great job. This is yours. All right. Thank you. Great job. For our last segment before we have a cocktail reception outside, it's a fireside chat. I would like to introduce our two speakers for this talk on how investors view FinTech. And I think that would be of particular interest to many of you in the audience. Kasim Mohammed from Omers Ventures, please come up to the stage. And Shilu Modi of RBC. Please come on up. At Omers, Kasim focuses on the consumer internet and software sectors, involved with investments in Shopify, Hootsuite, Wattpad, Jobber, 360 Insights, and Clipfolio. Prior to Omer's, Kasim was an operations team member at Pivotal Software, working with startups and Fortune 500 businesses on their strategic mobile app development and big data initiatives. He also writes for the Globe and Mail, Canadian Business, and Forbes on emerging technological trends. Shilu Modi, on the other hand, is an expert in formulating and executing digital and innovation strategies for financial services. For more than 18 years, he has pioneered digital innovation for some of Canada's best-known financial services firms. He was also recently named one of North America's top 10 social business leaders by InfoWeek. So I guess since I don't know if there's an extra handheld mic, I guess I'll just stand here instead of sit with you comfortably and pretend there's like a crackling fire and all that stuff. We do have another one? Okay. So I'll sit with you guys for a change. There is a fire? Oh, look at that. Digital innovation. Thank you, Charles. All right. I'll sit with you here. So Shilu, let's start with you. Tell us a bit about your work and what you're responsible for at RBC.
Well, Deepak just unknowingly took a shot at me because I'm one of those financial services firms that opened a lab. Go figure.
You opened a lab.
So I head up innovation partnerships at RBC, and part of what we do is, the best way to call it is being a talent scout for startups or fintechs that are going to change the way we do banking over the next 2, 3, 4 years. So there's part of it that's talent scout, but the largest part of it is once we find a company that we want to work with and bring into the lab to work with our developers, making sure that that process of getting into working with the bank is easy. I don't know if any of you who run fintechs work with banks, but we're generally not the easiest to get through the legal and compliance and risk and information security and procurement processes. So I help, or my group helps this group, the fintechs, come in and work with the bank easier.
Is it a matter of hedging your bets? Because, I think the big 5 banks are in some ways afraid of this fintech movement. Smaller, more nimble, digitally savvy organizations. So if you can't beat them, join them or acquire them or what have you. Or is it a matter of, it's just smart business sense?
Well, look, here's the thing. I don't think there's any bank or any insurance company in Canada left that is saying, we don't need to worry about the up-and-coming technology. We have the gift of hindsight. We're able to see what happened to companies like Blockbuster. We're able to see what happened to the travel industry. All of the banks have some form of innovation now and are, it's not a can't beat them, join them, but it's our customers and our clients are looking for a different experience. What is it these small companies are giving them that we're not able to give them? And let's find a way to give to them. And if it is by working with these companies as a partner, as a co-developer, as an investor in, as a client of, to give our clients what they want, why not do it? Why not do it before they do it for us?
And be a competitor, right?
Exactly.
All right, so Kasim, please tell us about your work with Omer's Ventures.
Sure, I guess before I say anything, I'm glad you picked up my phone call before we came here.
I like your fashion sense.
Did you match you guys called
No,
each
we
other.
were walking up, I'm like, wow, I guess brilliant minds think alike. So yeah, my name is Qasim, and as Mark mentioned, I'm a VC at Omer's Ventures. For those of you who aren't familiar with Omer's, it's the 3rd largest pension fund in Canada, and we are the direct venture arm of the pension fund, which I think is a bit of an experiment on a global stage because I myself am not familiar of any other pension fund globally that does direct venture investing. A lot of them do fund to fund. So it's been a really cool experiment thus far. We've been in business for 6 years, and over the course of those 6 years, we've raised about $500 million, most of which is deployed now across 30 investments. Our biggest theme is Canada, made in Canada for Canada. We have over 92% of our investments in Canada, with the remaining being in the US. And our approach in the US is always, what are those key thesis areas that we've been focusing on that we can take those shotgun, targeted investments on and go into the US market that way, because we're not foolish enough to think that we can compete with those VC firms in the Valley and Boston, New York that have pedigrees that far exceed ours at this moment. So made in Canada for Canada VC fund.
Do you find that Canadians, perhaps you've already answered this, they want to invest in Canadian companies. I bring this up because I attended a fireside chat on Wednesday with Anthony Lacavera from Wind, now with another firm that invests very heavily in fintech, in the fintech space, Global Live. He got a lot of slack when he started Wind because he had foreign money, if you remember. It was an Egyptian backer initially. But he said on stage the other day, he went to 85 organizations in Canada, 85 investors. They all said, no, we don't want to go up against this oligopoly, the Bell, Rogers, and TELUS. You're on your own. So then he went and found foreign money, and then he got flack for that too. So do Canadians feel like they could invest in a Canadian company, or only if the risks are low?
I think that's one of those conceptions that our fund tries to fight every single day, because this fund came to be 6 years ago when our fearless CEO, John Ruffalo, who was the head of the tech practice at Deloitte, kept giving a lot of slack to the private institutions or private sources of capital in the country, whether it's banks, pension funds, saying why aren't you deploying more capital into the startup ecosystem, into the technology ecosystem? And OMERS was gracious enough to say, hey, you want to do this, let us be that source of capital for you, and then you can go on and find these great opportunities from coast to coast. I think we have a lot of work still to do, but it's remarkable to see just obviously the work that we've been doing over the last 6 years, the impact that that's made. Our companies, the 30 or the 26, to give or take one, companies that we funded in Canada alone have brought over $1 billion in capital to this country and have created over 5,000 jobs. So I think it's something that we were kind of getting back into the cycle of, given the the repercussions of the dot-com burst in the last decade. And I think we have a long way to go, but the seedlings are there for us to be at the same level as a Silicon Valley or New York, I think, in 10 to 15 years.
And just to add to that, one of the interesting things that's happening right now is Silicon Valley. A lot of the VCs down there are actually saying, go north. There's a conference just down the road right now with Google telling startup companies in the Valley, it's time to come to Toronto. The Valley is full, it's too expensive. Raise your money down here if you need to, but Toronto is now where startups come and run.
And York Region.
And I'm sorry,
Yes.
of course. The greater Toronto area is where is Silicon Valley North now. And it's if it hasn't already taken off, it is primed to take off in the next 18 months, 2 years. So there is a lack of capital. It's a lot better than it was about a year and a half ago. And I think a year and a half from now, this won't even be a conversation, I hope.
Shilu, from RBC's perspective, why is technology so important to the financial services space?
It's, 10 years ago, when online banking was just in its infancy, it was actually hard to pull people out of the branches. And the push was trying to get people to move to do whatever banking they could do online. It is now almost exactly the opposite, where our clients, our customers are coming to us saying, we want to do more. We want to do not just online, we want to do mobile. We want to do Apple Pay. We want to do Android Pay. We want to bank where, if I'm a client, I want to bank where I want to bank, when I want to bank, how I want to bank it. And we are doing very quick catch-up to meet them where they want to be. So technology is going to be the best way to do it. And before I started working at RBC, and I've only been there a couple of years, before I started at RBC, I had this mentality that the smartest developers were not at the bank. Since I've been at RBC, I've realized that we have incredibly smart and good people in-house. But when you want to do one very specific thing, or you want to do a very specific way of doing something, there are fintechs out there that do nothing but. They specialize in nothing but. I mean, Bianca and BioConnect is a perfect example. They live, breathe, eat biometric authentication. We have the option of ramping up an entire internal team to learn what these guys already know, or we can partner with them and give ourselves a head start. So looking for the technology that meshes where we want to go, partnering with the right companies in the right way, and moving forward with them, it just makes sense for both the bank, our shareholders, and obviously number one, our customers.
So sometimes it's a partnership, other times it's an acquisition. Think about Tangerine. I can't think of a bigger example of one of your competitors, Scotiabank, buying this really a fintech company before that buzzword was around, formerly ING Direct, for those who wanted a bankless bank. There's an M&A side of it too.
That's exactly it. So when we do find a company that we want to work with that has something that we want to do something with, the options are wide open. Option number one is become a client or a customer of. Option number two is do some co-development with or use some of our subject matter experts to help them with the use cases. But then we've also got the options of becoming a limited partner in the venture fund that is investing in. Outright acquisition. We have, in certain instances, taken every single one of these options to get us to where we want to be for our client-facing tools.
Kasim, from your experience at OMERS, who's investing in fintech exactly? Is it one sort of discipline over another?
So I think in Canada particularly, I'd say 95% plus of the VC funds that we have taken an active interest in the fintech space. And I think the second piece of that equation are the financial institutions, just like Shulu mentioned, that have undertaken these co-creation schemes and also built these innovation labs that I think have been an excellent forum through which the startups that are working on solving some pretty critical problems in fintech are able to consult with their expertise and also get a sense of how can I eventually graduate into becoming one of your customers. And I think I look at a lot of different industries, but the thing that I'm most impressed about with the fintech industry is how the corporates have kind of opened up to the startup community, the fintech startups, and I want to see that happen in all the different verticals, whether it's retail, you name it. So I think that's one thing that's been going really well for this this group of companies.
And the thing that works out with the lab environment that we have is that it becomes a symbiotic relationship. The company has the skill, the deep expertise. We have the data and we have the subject matter experts who understand the banking system, the payment stack like the back of their hands. We are not going to get the expertise that the startup has. They're not going to have the data that we have unless we work together. And when we work together in our lab environment, I think it's safe to say both parties come out richer, and at the end of it, it's the end user that wins.
I'll ask both of you this question because I know there's some owners of small fintech companies here in the audience. When you're looking to invest in a company or your clients are looking to invest, are you looking for a company that is trying to reinvent the wheel, or is there something to be said about just modifying an existing concept, making it better? Without giving a fintech example, I'll give you two from the tech world. Facebook is really just MySpace, but a refined experience. And the iPod wasn't the first MP3 player, but they thought about the UI, the user experience, and the interface. So it is possible to, instead of reinventing the wheel, can you iterate on something? And is that just as appealing to an investor, or do they want the next big thing that's going to change the world? We'll start with you, Kasim.
Sure. So I'd answer that question in two parts, because I think it's a question that I get a lot, especially because a lot of the companies, especially when you're dealing with ICT companies, it feels like everything's a Me Too company because everything's been done. But I'd say the first thing is that you have to understand that anytime an investor is looking at your business, everything boils down to three fundamental points. It's the market size, it's the team, and it's the product. Actually, I messed up the order because team should come first, because one thing we always look at is why is it that these people are the right people at this particular point in time to go after the problem that they want to go after? Now, to the point about building something and not, something that maybe already exists and not reinventing the wheel, I think that kind of thinking sometimes can stem from a line of thinking where you're actually looking for a problem to solve. And I think there's a lot of entrepreneurs out there that do that, which is fine, but understand that venture money particularly is for problems and organizations going after problems that are so big that they require, the ability to scale in insurmountable, speeds and whatnot. And I think that's where we come in best. But as a venture capitalist, I would love to build a company that doesn't need venture money. I want to build a company that's doing $20 million in sales in 5 years, but I own 100% of that company and I don't have to report to a board every quarter. You know, that's the kind of company that I would want to build. So if you're thinking about venture money in particular, think about this has to be a massive market, and you need to be able to scale very, very quickly because you're going after an opportunity that is obviously brand new. It's a blue ocean, and it's a problem that's currently not being solved by existing incumbents in a market.
That's the big catch-22 of the Canadian venture scene, is the ones who get the venture money generally the ones who don't need it. The ones who need it don't get it. So it's there's a bit of a chicken and the egg. And one of the most recurring themes that I get from startups that I talk to is, how do I get on the bank's radar? How do I even get an introduction or get in the door at RBC? And anyone that's playing buzzword bingo, I'm going to use the word symbiotic twice now. VCs like OMERS and banks like RBC have a very symbiotic relationship in that when we're looking at a company that we might want to work with, one of the greatest things they can come to us with is we have a firm like OMERS backing us, investing in us, and that immediately gives you a level of credibility that you may not have otherwise. On the flip side of it, I'm sure that when a company is coming to OMERS and saying, you know, we have RBC as a client, that gives them a level of credibility they wouldn't have otherwise. So unfortunately, there's another chicken and an egg there. The toughest part of it, though, is the incremental changes, the incremental reinventing the wheel, I guess, is kind of the term you used, are all great, and we do a lot of that. It's the next big idea, the next big way to change it, but at the early stages, and founders who get it and understand the financial system, that is where an innovation lab gets excited. When it's the incremental changes, a better email system, a better fraud detection system, we do get those, but we pass those back into the main RBC business. It's the things that are going to change the way we do banking in the next year or two when they come into the innovation lab.
And just to add to that, I want to stress that mobile is maturing. You know, if you look at the latest data, the growth in the number of apps being installed, it's starting to decelerate. Just the smartphone as a computing platform really is starting to mature. So I think those opportunities within mobile, they are becoming less and less. And so for venture investors, when we're looking for, you know, multi-billion-dollar exits, whichever opportunity we look at today, perhaps, you know, related to fintech, you know, it's harder and harder to find those blue ocean opportunities that are founded on the smartphone computing platform.
That is one of the things that causes me pause whenever I'm talking to a company, is when they say, we do X, Y, and Z, and all you have to do is download our app, and we can do magic and wonders. And
But getting people to download that app is impossible.
there's the funniest stat I heard recently is in the last month, the average person downloaded 0 apps, right? Which is, if you think about it in this room, I'm assuming it's probably close to true. And I'm going to get these numbers wrong, but you know, people have about 70 or 80 apps on their phone, but 5 of those apps are used more than 50% of the time, and then the rest of them, either the other 50 are never used at all. So when a technology comes to us and says, and when you download the app, when your users download the app, it can do X, Y, and Z, it's a much taller hurdle to get over than we integrate inside the existing app that you already have.
I think that's a good segue to, well, I just want to remind our audience that in about 5 minutes from now, we are going to open it up to some questions. We want to be respectful of your time. So if you want to start thinking of some questions. But with that in mind, do you look for ever fusing 2 fintech companies together by saying, you know what, I love the team on this company, and then Omer says, but I love their technology on this side. Let's put the 2 together and integrate it into a third, maybe RBC feature that is lacking. Do you ever do that kind of work, or is that just too much?
No, not as often in that. You know, we try to, when we're investing in a company, especially at the early stages, one of the big drivers, like I mentioned before, is team. And you want to look at the team and evaluate the team for what it is at that point in time, and try and evaluate how is it that the causal ambiguity of this particular team is primed for success with the problem that they're going after. So we're not private equity guys, right? Where in later stage deals, you might want to do some financial engineering or play around with the management to get a sense of, you know, how can you, you know, continue to drive value, because those businesses have inherently less risk than at the early stages. So, but that having been said, our business is all about meeting people and connecting people. So if we feel like people should be connected, we see thousands and thousands of pitches every single year. We're always brokering those connections.
That's one of the great things that RBC is lucky with, that we have great partnerships with a lot of firms like OMERS and a lot of the other venture capitalists, that even when they decide not to or not to invest, when it's not the right fit for their thesis, the introductions come into us, and coming through a trusted curator is gold for us, because you might know the number better than I do, but I keep hearing there's 3,000, 4,000, 5,000 fintechs in Canada, and there's no way we are going to look at them all. But guess what? It is your job to look at them all, and your firm's job. And when they come with a referral through you, it does make the curation process a lot easier.
Same question, the last question for both of you. We'll start with you, Shilu. For those in York Region who own or work for a fintech company trying to get recognized, maybe they're looking for some investment money, what advice could you give them on best approaching the likes of a bank or a VC firm, or any sort of parting thoughts, just some takeaways, some calls to action here?
Work with one of our commercial bankers. Sorry, I just see over there. But if you're not banking with RBC, option 2 or 3 or 4 is generally we work with trusted referrals. So coming in through a VC firm, even if they're not investing in you, coming in through another trusted source is the easiest way. I know it's very hard to get on a big bank's radar. We're not the only ones. All of the banks are going to be the same. It's hard to get through the door. The other great way to do it, and I know it's hard to do, but at events like this, to find the right people, and the elevator pitch. It is the 10, 15, 20 second, here's what we do. I can tell you relatively quickly whether that kind of fits in something we're looking at or not. And please don't be offended if I say, not today, come back in a few weeks, few months. But these networking events where you will meet people like me and people like Kasim, and telling us what you do is the best way to get on the radar and get noticed.
All right, so sharpen your elevator pitch. Networking is key. Is it unprofessional or even just a waste of time to reach out on LinkedIn and say, I have this great idea? Not the old, I want to pick your brain over a coffee.
I'm going to tell the God.
Do you ignore those? Do you ignore those?
I get 50 to 60 cold LinkedIn emails. I get 50 to 60, maybe up to 100 cold emails. Right. I get phone calls out of the blue, and
but if they're not connected, if not everybody knows somebody who can get to you, right? So what else can you do other than attend events like this?
Unfortunately, that's the downside of it, and I know it's not the right message to hear, but you can. It is difficult to get noticed, but if you can find an avenue in, even a place like this, it's the best way to do it and not get lost in the noise, not get lost in the needle in a haystack.
Kasim, I know you said you're not early stage, but
how
else can a York Region company break?
Yeah, but to your point about early stage, I mean, I think the best time to reach out to VCs is when you don't actually need their money, right? Because at the end of the day, we like to invest in people, the people that we want to work with, and so the earlier you can start finding those individuals that you want to potentially, pitch to down the road, the better for you. I think in terms of your initial question about how to position yourself and get in front of banks or VCs, identify clusters in the GTA and frequent those clusters. One of the things that I'm excited to see York Region do a lot of, which I'm so glad, like Jonathan and Marnie, you guys are having this event, is, to me, this is the start of a cluster of some kind in York Region. We already have the Venture Lab in Markham, for example. We have the 111 cluster downtown Toronto. It's an accelerator that we support. There's the Communitech Velocity cluster in Kitchener-Waterloo. As we start to cluster our people in our communities, you're going to get the right stakeholders and the right people rubbing shoulders. But before we really get there, which is to our previous discussion, it's going to take a couple more years, I think, till we really reach the apex of that. Reach out to us on LinkedIn. Like for us, all our emails are on our website. You can email me at any time. Quite frankly, I get surprised that people don't know that our emails are on our website and our phone numbers on our website. I'm actually in charge of our @info inbox. So all the crazy pitches, you know, the people that like don't know anyone and are just randomly sending applications to our website, like I have to review those, and there's hundreds of them. But I take my job very seriously, and what excites me about my job.
So do I.
No, of course. But like in the sense that a lot of VCs are notorious for not even having that feature on their website. You know, they don't want unsolicited pitches. They want every pitch to come in through a referral. But the reason we do it is because we recognize that in Canada, there's a lot of work to be done around getting more capital in the system. So if there's a pitch, we want to see it, we want to talk to you. And yes, I review every single pitch, but I don't always respond to every single one, but I review every single
So
pitch.
if something piqued your interest, you'd write back.
100%. I mean, why wouldn't I, right? I want to make money, and if you're going to help me make money,
Yeah,
then let's
right.
talk.
That's an honest answer. All right. Well, without further ado, why don't we open the questions up from the audience, if there are any, before we call it a day and have our reception outside. Any questions for Kasim or Shira? Yep, please. Do you have a mic? Is there a microphone? Or do I have it in my hand here? Please tell us to whom the question is for. And
Hi there. I'm Stan with the National Research Council IRAP program. I wonder if you have a bias for firms who are looking to grow and operate a business as opposed to having an exit strategy and looking to sell.
I think that's for Omer's, right?
I think for us, you know, we're never, it obviously depends on stage. If you're a seed Series A company and you come pitch to us, we're not thinking about the exit at that point in time, because we just want you to focus on building a really great business. But if it's a Series B, Series C opportunity, a pre-IPO investment opportunity, then of course we're looking at, you know, exit opportunities. But all of that having been said, I mean, we're investors in Shopify, for example. We're very proud investors in Shopify, and you know, we got in, I think, a little bit later than perhaps we would have liked. You know, we were just still coming onto the scene then. Bessemer, a prominent US-based VC, had already scooped them up at the A stage. But you know, we're still investors in Shopify. It's a great story. They're already public. But I think if you're doing well, your exit is going to look like an IPO, and that's an exit that nobody's complaining about. But if you're implying in the sense that, you know, you're going to try and force the sale of this company and whatnot, if that happens, then everything went wrong. You know what I mean? Like, that shouldn't be happening in any instance. The entrepreneur should have full ability and full control in being able to run their business, and that's something that we support every single day and every single time.
I would have nothing to add to that. We are not looking for investments or exits. We are looking to help our banking strategy and help our customers. It is not a financial play, to put it that way.
On the early stage side, could you give a little bit of insight into how you assess and gain comfort incrementally over the design and testing stage? Because as you said, it's ambiguous. You're going to pivot, you're going to change direction. So,
Sorry, which one of us were you asking?
well, I guess it's both of you, but you'll be coming at it from different angles, because I guess you've got different payoffs in mind.
We're generally not looking for a company that is going to pivot. I mean, as Kasim said, one of the things that we look for up front is not just a great idea, but a great team. As I've learned going through this role, the founders are almost as, if not more important than the initial idea, because the idea can change once they come in-house. If they pivot once they're in-house, hopefully they're pivoting in the direction that we're asking them to pivot. But it's not something that we are generally looking for in any of the companies that we work with.
Yeah, so the way I would answer that question is, one of the benefits of seeing thousands of pitches every year is you accumulate a lot of data, and that's data that we use to benchmark against other opportunities. And so, of course, that's knowledge that I have, knowledge that you don't have, so I can appreciate that there's an information disconnect there. All of that having been said, depending on what your business model is, so for example, let's say it's a SaaS fintech play, there are so many great metrics that you could find anywhere, online, for example, or even through your conversations with VCs, where we'd say, if you're a SaaS offering, you know, we're looking for at least, you know, 10%, 15% month over month growth. If you're looking at an institutional seed round, try to have at least, you know, 20,000 in MRR, just certain metrics that I think you can triangulate to. But it really does depend on your business model, and I love to say to people, like, if you're doing well, you're going to know that you're doing well, and then people are going to find you because you're doing well. If you're doing well, people always find you. So if you're having trouble for whatever reason, really take a step back to think about why aren't these pitches going as planned, and more traction always is better than less. And to my earlier point, the earlier you can establish those relationships, the less the time it will take for you to run a fundraising cycle, because you'll already have those people as friends and they'll be more honest with you, right? So, not sure if that.
All right, we have time for one more question. If there is one. Okay, last question, please, over there.
Again.
I just want to drill down on that last comment. Do you think that there's a time when it's too early? In other words, you establish that sort of connection with somebody who's an angel investor or VC, you're not ready, and therefore you've basically blown your opportunity to impress?
I really don't think so. If you are an expert, let's say, and you have a very seasoned career in financial services, and like I said, you seem like the guy that's the perfect guy to go after this one problem that you may have ideated, and the time is now. I would love to meet with you, for example, because I'm always looking to learn from new people who are experts in their space. And so even if you're not necessarily looking for an investment opportunity, I'm always happy to connect with people who have a problem that they've kind of ideated, and maybe I can help point you in the right direction. Speak to this person, speak to that person. But I mean, in terms of timing, there are the right folks to approach. Like you had mentioned, angel networks. We have York Angel Investors here in the York region, for example. I think there's a lot of folks that are part of that network that would be happy to connect with folks that are at the very, very early stages. And there's also a lot of really early stage VC funds, whether it's Golden Venture Partners or Mars IAF in Toronto, and the Golden Triangle Angel Network in the Kitchener-Waterloo region. There are a lot of organized early stage investors that you can, without fear, reach out to, knowing that it's not too early to reach out to them. But for someone like me, like I'm personally telling you, if you don't ever think you're too early with me, I want to talk to cool people.
Sheila, we're good? All right. Thank you very much to Shilu and to Kasim for your time and your expertise. It was a very insightful chat and very motivating as well. So thank you very much. Please give them a round of applause. And a big thank you to York Region for hosting this event, which, as it was sort of validated just now, that events like this are great to connect York Region businesses to one another. Please plug the YR FinTech hashtag if you are on Twitter. Tell us what you thought of the event, publicly or privately. We're thrilled to have your feedback. And once again, we want to thank our partners, our event partners, our Ernst & Young, Business Development Bank of Canada, Royal Bank of Canada, and Lloyd Media. Please join us in the foyer for our cocktail reception. Thank you very much.